Welcome to this monetary policy special. The minutes of the monetary policy meeting held on June 8th are out. These minutes once again show a difference of opinion between the RBI members on the MPC, especially Dr. Patra and the governor, and at least one of the external member, Ashima Goyal. The governor and Deputy Governor Patra are still arguing that we cannot assume interest rates have peaked when we are far away from the 4% target. But external member Ashima Goyal is almost making a case for a cut by saying that very high real rates, that is the difference between the nominal interest rate and inflation, the real rate, if it is very high, it can hurt growth. However, there is a point on which Dr. Varma seems to be aligning with the RBI members when he says that we cannot sound self-congratulatory about inflation, meaning thereby he doesn't seem to be in a terrible hurry to at least reduce interest rates or believe that inflation is on a downward trajectory. I have with me all the three external members of the Monetary Policy Committee. With me, Dr. Ashima Goyal, Dr. Jayanth Varma and Dr. Shashanka Bhide. Gentlemen and Ashima, thank you very much indeed for sparing time for us. Well, Ashima, actually the first question is to you. You're making a case for a cut. You would like it as soon as the next policy, primarily because of the real rate?
No, I'm not saying that I want a cut and by the next policy. I'm just saying that we have to be careful that we don't let the real rate rise. So it depends on the data coming in, especially still a lot of uncertainty about the monsoon and what the data says for our inflation projections. And I also say that we need to be sure that inflation is moving towards the target in a sustainable manner, right?
Yes.
Then, I mean, if it is moving towards, because our repo rate has to be calibrated to the expected inflation rates are months ahead. If it is reaching 4%, then 2.5% is too high.
Yeah.
Right?
I know, I take your point on that, but the RBI's own forecast is that the second half inflation is going to be above 5%, 5.2 from current reckoning for the last quarter, Jan, Feb, March. If you take, say, 5.2 as the inflation, then at 6.5, we are only 130 basis points. Does that sound too high, or is that okay?
I think that is okay. A range around 1 is all right. Because we have some demand weaknesses, so we don't want the real rate to go too high.
Okay.
So I think that around 1, with some margin around it, is sufficient to ensure that we don't have overheating.
Okay.
At the same time, we're having inflation expectations.
Okay.
Yeah?
Fair point. I'm just coming to the overheating and the growth part, but Dr. Varma, I wanted to ask you what exactly you meant by saying that we shouldn't sound too self-congratulatory about inflation. Of course, you're objecting to a specific statement in the policy statement, or is it that you fear that we have not yet, sustainably conquered inflation?
Yeah, I think, that sentence, we got inflation down to a reasonable number for 2 months.
Okay.
And that statement seemed to be saying that, this is all because our monetary policy was very good and, the supply side measures were good and so on. I think there is a lot of month-to-month volatility. Not everything, is due to what the MPC does.
Yes.
So I think, one should be a little more balanced about these things.
Okay.
That
All right.
Inflation will go down, will go up. Okay. And what is important is the longer-term trajectory. That it comes down, and only when it comes down on a sustained basis, close to 4%, should you really be declaring success. Okay. So it's not really a question of worry about inflation, but to me it appears to be a premature declaration of victory and premature self-congratulation.
Maybe that sentence may sound like that, Dr. Varma, but overall, the minutes, including the RBI members in the MPC, are still worried that we have not yet got to the target, and they are worried about the uncertainties along the way. So, would you also say that MPC should start taking actions of cutting only when you sustainably see 4 point something on the CPI?
I think it is, I have been saying this repeatedly that, monetary policy cannot be done looking at the rear view mirror. What is important is what are the projections 3 to 4 quarters down the line. So it's not that we should see a print of, 4 or close to 4. What should be clear is that the projections 3 to 4 quarters ahead are showing, a number which is close to the middle of the target. That's what's important.
Come close to the middle of the target, as in, would 5% suffice for you, or do you think the MPC should be targeting towards 4% and below?
I think the target is 4.
Yes.
The target is 4, and there's a tolerance band around that.
Yes.
But definitely one should be seeing projections that, that are in the vicinity of 4.
Okay. So projections in the vicinity of 4 alone will satisfy you to cut rates. Dr. Bhide, did I get you right, Dr. Varma? That's what you were saying.
That's right.
Right.
Absolutely.
Okay. Yeah. Dr. Bhide, actually a similar question to you. You've more or less stated the ecosystem as it exists at this point in time. But when would you think the MPC can take the step towards receding from current rates? Would you also want to see a 4% forecast?
Yes, I think a forecast which shows, a steady decline in the inflation rate to 4% or close to 4% is what I think is necessary. But there's always this balance, I think, in terms of how far away is the forecast horizon. So I guess what certainly we would like to see is the forecast over next probably 2-3 quarters or so. So I think this sort of sustained direction of this inflation rate is what I think we should see.
Okay. No, Dr. Bhide, why I'm specifically asking you about forecast is if you look at the last MPR, the Monetary Policy Report, that is forecasting 4.5% inflation for average inflation for FY25. We will get another MPR in September. If it were to forecast, say, 4.5 in the first 2 quarters or the first half of FY25, will that suffice? Or would you want to see readings of 4% before you believe that forecast?
No, I don't think I don't think it is the readings of the 4% at any particular quarter. So it has to be projections, and I think the projections made in the MPC meetings, they would be important. It's not just hitting 4%, but I think it's also sort of reasonable understanding that that is a sustained level of inflation rate.
Okay. Actually, a similar question to you, Ashima. It's quite possible that until now we have forecast only till Jan, Feb, March of FY24, or rather 2024, Jan, Feb, March. We don't have projections, but we have the Monetary Policy Review broadly saying that it is expecting 4.5 in FY25. If that's the forecast for Q1 of next year, will that suffice for you, for the MPC to start moving rates lower?
Yes, I think 2.5% 1 year ahead is too high, given the softness that we see in demand, the international exports slowing, etc. And also, I think the next few months are critical. That is why we need to pause, because of the monsoon, and also this story about core inflation. For the last 2 years, it's been high. And the perception has got around that core is sticky and it's, but, when I look at India and in terms as a macroeconomist, we don't have any second round pressures on inflation, true second round pressure. Because we don't have excess demand, we don't have high wages. That is what happened in 2011. And we know that in 2015, when oil prices fell steeply and rates were not cut commensurately. Real rates reached 4% and growth slowed.
Yes.
Yeah, so we don't want to be in that position.
Fair
And I
enough.
think we've done well. And I disagree with Dr. Varma because I think we should flag what we have learned, what has gone well, and use that to build our future action.
Okay.
Right?
Okay.
So
No, of course we
slowing-
should be learning. I mean, we should be bringing to the fore what we have learned. But my point really,
Less understanding yet about how inflation targeting works.
yeah.
So,
No, my
you know,
point is that the
learn-
forecast is likely to show 4.5 when we come to the September monetary policy report, and we will even get one forecast for Q1 FY25. If that's a 4 decimal point, according to you, 4 point something, that should be sufficient comfort to go ahead and cut?
Yes, I think so. I think 2.5 real rates would
Be so too high. What would your thoughts
But I
be,
think
Dr.
the
Varma?
next few months is also important. What happens to core inflation, whether it's sustainably coming.
Fair enough. Fair. Okay, over there, of course, we have a big event, El Nino, and I would be asking you about that event. But before that, Dr. Varma, I just wanted to get that point also out of the way, which I asked your other colleagues in the MPC, that if the forecast goes to 4% and 4 point something, will that suffice for you to turn the ship on monetary policy?
No, I think there are there are lots of issues here, and I think Ashima also raised an important issue that as an MPC we have to always think about the policy rate as a root rate, and when we talk about maintaining a tight monetary policy, we are talking about maintaining the real at a level which which is restrictive and which controls inflation. So that's the way we think about it, that we can slacken on or ease the real policy rates only when inflation comes close to the target. But nominal rates are a very different story. And you don't want to actually be raising the real repo rate.
Okay.
So there could be a point where the repo rate remains at 6.5. But to keep the policy rate at 6.5 is actually to tighten the real policy rate, because the inflation is coming down. And when the real policy rate rises above 1.5%, then it starts getting into the danger zone.
No, let me understand you correctly before I come to El Nino, because that will absorb a lot of the time. Dr. Varma, let us assume that in the September policy, not September, I guess it will be October. In the October policy, we will have a monetary policy report which might forecast a 4.5 inflation for April, May, June of 2024. Then the difference, 6.5 repo rate and 4.5 inflation will mean a forward-looking real rate of 200 basis points. So would you argue for a cut as early as October?
I think these are things to be looked at in the whole context of what happens.
Sure.
But definitely what I have mentioned in my statement is very clear that a real policy rate above 1.5% enters the danger zone. And we have to be very careful about that. We have to look at the balance of risks to growth and inflation. We can't be thinking in terms of nominal rates at all. We have to think in terms of real rate. And real rates have to be looked at in terms of projected inflation. But anything above 1.5 is a danger zone, and one should have very strong reasons for keeping the real policy rate above it.
Fair point, sir. Got it. I have to take a break, but two very important questions. One, hasn't growth surprised you all in the positive? That and where do we go with this El Nino uncertainty? Those two questions after a very short break. Welcome back to this special monetary policy discussion. The Reserve Bank has released the minutes of the MPC meeting which happened on June 8. And there appears to be a bit of a difference of opinion, continuing difference of opinion between at least Ashima Goyal, the external member, and two RBI members, in fact all the RBI members, who seem to be more worried that inflation should be brought down to 4%. The language seems to indicate that they wouldn't want to budge. In fact, they're not even willing to let us assume that this is a prolonged pause. The pause is only till the next meeting, as one of the members put it. I am speaking with Ashima Goyal, Jayanth, Varma and Shashanka Bhide, the external members of the MPC. Gentlemen, and Ashima, thank you very much for waiting by. Dr. Bhide, how should we think about El Nino? If there were to be, a subpar monsoon, maybe 90% and not 96% as the IMD has forecast, how should we think about it? Should we worry that inflation would rise or growth would be impacted? Dr. Bhide, I think you're on mute.
Sorry about that.
No.
So I think that, the El Nino leading to deficiency in rainfall or distribution of rainfall obviously would have an impact on prices. And that is something I think we should be concerned about, because a lot of the impact on inflation now, where inflation rate has come down, is also because of the food inflation. And so I guess El Nino certainly is a concern, and how it develops, I think is a concern that we should have.
Well, I just want to know whether interest rate would be the instrument that we could be using. For instance, the inflation rate, inflation number for the second quarter is 5.2%. That is for July, August, September, is expected to be 5.2%. Let us assume it comes in at 5.3 or 5.4. Would that be a matter of alarm for you, Dr. Bhide? Would you, or would you say that this is a supply side factor and we shouldn't use REIT?
No, certainly, it would be a supply side factor. But I guess the issue is how temporary, phenomenon that is.
Okay.
So in that sense, I think, it's a concern, because there will be some spillover effects as well, I think, of the food inflation.
Okay.
So it would concern us.
Okay, would concern you. Well, Dr. Varma, now let me come to the growth questions to you and to Ashima. Dr. Varma, you were worried about growth in previous policies. You have said that the rate at which the Reserve Bank is going on with the rate hikes, we could be endangering growth. Hasn't growth surprised hugely to the upside? Growth as a reason for cuts doesn't seem to exist now, you would say?
Well, I think the fragilities of growth remains.
Okay.
And growth is being held up. Growth is being held up by public investment and pent-up demand. And a lot of that is holding up growth.
Yes.
But the worry about growth, it remains to the same extent. Again, let me repeat this. What is of concern to us is the growth expectation a couple of quarters ahead, 3 quarters ahead, 4 quarters ahead, and so on.
Yeah.
So 1 month's print does not change things to that extent.
Okay.
The global environment continues to be a matter of grave concern. External demand is muted. We are seeing that hurt more and more sectors of the economy, even the sectors which seemed to be immune to global factors, like the services sector is also feeling the pinch. So I think the fragility of growth is still there, and I don't think my view on that has changed a lot. Okay. 1 month's print does not, 1 month print on inflation does not
change you
that much, and 1 month's print on growth doesn't.
Well, I take your point, but it is not just 1 month, it's a quarter, and it's not a print change of 10 basis points. It is 100 basis points higher than what the average we got in a poll, what the RBI forecast. Actually, the RBI's last forecast of the Q4 number was 4.6. We have actually got a 6.1 number. They forecast 4.6. I think it was the December policy. And in the next policy, they didn't have to give a fourth quarter forecast because we were in the fourth quarter. I mean, we have done much better than what RBI or the NSO forecast at 5.1. Ashima, doesn't that take away the argument that we need to cut for growth's sake? It's certainly surprising on the upside.
No, I think that this underlines that lesson I wanted us to learn. You know, at least I've been saying the last 2-3 policies started saying that 50 BPS is too much. But after 2 months, it was reduced to 25. And then after 2 months, there was a pause.
Yes.
So we did not exceed that 1.5. If we had continued at the same rate, we might have seen very different growth outcome.
Okay.
So that is why I say that smoothing and keeping real rates within a range that doesn't hurt growth and yet retards inflation is important. Smoothing shocks. In the past, in emerging markets, we've just taken external shocks and said we can't do anything, inflows are too large. But this time we have seen, even our reserves are recovered, the exchange rate is doing well. People were predicting it would reach 85 and beyond. Here it is, so it's recovering.
Okay.
So we have the economic diversity and the wherewithal to smooth external shocks and suit our domestic cycle and sustain growth.
Okay.
And I think policy with both on acting on the demand and supply side has achieved this.
Okay. Well, actually, they say that policy takes about 2-3 quarters to start having an impact. And the RBI and the MPC started pausing only from April. So, this growth has come at a surprise of 100 basis points higher than expected well before the pause came, in spite of the hike in rates. So, does it give the picture that growth is more resilient than anyone gave it credit? Would you say, Dr. Varma, do you think that growth as a reason to cut rates doesn't exist at this point in time? Dr. Varma.
No, I think the monetary policy is guided by projected inflation, projected growth, and what is the real rate.
Okay.
And what is happening as inflation comes down, the same nominal repo rate translates into higher and higher
real rates.
Okay. And the inflation is coming closer to target, the real rate is rising, and the question is what is happening to growth. So it's a balance between these three things.
Okay.
And I think we have been pretty clear that when inflation is well above target, that obviously becomes a priority.
Sure.
And, so that clarity is definitely there.
Yes.
So inflation, keeping growth into account.
Yes.
That is the way it has been. So I think the key drivers will be what is happening to projected inflation, what's happening to the real rate. And we don't want the real rates to rise to a level which chokes off the incipient growth there.
Okay. Yeah, take your point. I mean, that message comes very clearly in your current minutes as well, that the priority would remain that inflation sustainably come down. Very quick last question. I'm told I'm out of time. Dr. Bhide, what's your sense of growth this year? 6.5 is still an outlier number. There are only 1 or 2 economists who believe growth would be that good. Do you think we will get to 6.5 or is it under threat?
Obviously, there are concerns on the growth trajectory as well, because I think one of the concerns is that manufacturing sector, for example, I think even with this high growth numbers, except in the Q4 probably, I think we have not had a good year for the manufacturing sector. No. So that is a concern. A second concern is obviously on the investment front.
Yes.
Again, 22-23, I think the numbers look good because of public investment, and the private investment, I think, was not that high. So in this sense, I think the growth is also as Professor Varma said, it is a fragile sort of scenario for growth also.
Fair enough, sir. Just a final question to you, Dr. Varma. Do you think we should do away with stance altogether? There doesn't seem to be any agreement. That's why.
No, I have been of the view that if the stance is there, it should be clear.
Okay.
And by clear, I do not mean that it is clear to people inside the RBI. It doesn't mean that it is clear to a bunch of bank chief economists whose job is to try and parse what the RBI is saying. I think when I say that the stance should be clear, it should be clear to ordinary people.
Okay.
To the intelligent layperson, the stance should be clear. If you're not doing that, then I think we should drop the stance.
Okay.
And a stance which only professional forecasters understand, which only people inside the system understand. That is not a stance which a democratic regime should accept from its people.
Okay. Yeah, that's
stance should be clear to people outside the inner circle of the system.
yeah, but then I take your point. I take your point, sir. But that's something monetary policy in every country is struggling with. Very few people understood Greenspan, isn't it? That was the perennial joke about him. Anyway, that discussion for another day. Dr. Ashima Goyal, Dr. Varma, and Dr. Bhide, thank you very much for parsing the monetary policy statement as well as the economic situation that we are in now, fraught with uncertainties. I take your point on that. We wrap up on this special broadcast on the monetary policy. Thank you for watching.